Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we're going to take a look at Aflac. It is August 24th, Wednesday, midway through the week, almost done with another one on the downside anyway. So let's jump right in and take a look at Aflac. They are an insurance company out of the financial sector. And if you want to know more about them, check them out at www.aflac.com. That is their homepage. Aflac is a Fortune 500 company providing financial protection to more than 50 million people worldwide. When a policyholder or insured gets sick or hurt, Aflac pays cash benefits promptly for eligible claims directly to the insured, unless assigned otherwise. For more than 6 decades, Aflac voluntary insurance policies have given policyholders the opportunity to focus on recovery, not financial stress. So they are basically an additional insurance that will cover the, or offset the coverage if you're injured, and you're usually whenever you get injured, your pay would be like 85%. So they would cover that 15% additional on top of what your insurance would cover for lost wages or additional insurance. So I do like that they've been around for 6 decades. Aflac is one that I've kind of looked at before, but I just never know how. I mean, are there a lot of people picking up additional insured? I'm sure there are, but it seems like that's more of a higher income clientele that would do that. I don't know a lot of people in the lower middle class that would be buying additional insurance. They might be just rolling with whatever their company offers. So I'm always hesitant in times like these where you're, maybe in times where people are tightening their belt, so to speak, recessionary times, high inflation. Is this one that people would cut out of their budget? That's what I'm always concerned with a company like Aflac. But let's take a look at what they're doing. They're down 0.06%, so we'll call it flat on the day. 61.55. They closed out August. It's 24th. I know it says 23, but it's actually the 24th. At ticker AFL, as I mentioned before, they are in the financial sector. They have a 52-week range, a low of 51.28, a high of 67.20, so definitely closer to that 52-week high at 61.55. They have a market cap of 38.894 billion, a beta of 0.93, so just about as volatile as the overall market. You can clearly see that over the course of the day. They do have a low PE at 9.28. For dividend at $1.60. That's paid out quarterly, so divide by 4. That'll tell you what your payout would be. And a 2.6% dividend yield, a little higher than the overall market. Their next ex-dividend date was yesterday, or their last one was yesterday, August 23rd, so you've missed that. They're not in your portfolio currently. If you bought them now or going forward, you would have to wait till their next dividend to get paid. And according to Yahoo Finance, where I pulled this information, not affiliated, just where I like to look for some information, they have a 1-year target of 61.92. So they might feel this one is a little overpriced as well. That's currently higher than just higher than where it's sitting at. So, I mean, not much growth if they were right, but let's take a look at what some other analysts have to say. And according to stockanalysis.com, again, not affiliated, just where I like to pull information from, and the 18 stock analysts they have had take a look at it, consensus hold, and I would tend to agree with that. Like I said, close to their 52-week high, not really a big pullback here. They have a low estimate of $54.54. That's pretty close to their 52-week low, and I would be much more interested at that low 50s, even below this 54.54, and that would be a 11.39% decline. They have an average target of 62.69, which would be a 1.85% increase in stock price, so not much growth there. And even if it was to hit their high of $70.35, which I think is pretty aggressive, it would be a 14.3% stock price appreciation. Again, it's just one that I've looked at before. I like the company. I like the brand. I mean, everyone knows Aflac, right? The Aflac Duck. So I think it's one that has staying power. Obviously, it's been around for 6 decades, so over 60 years. So I don't think it's going anywhere. I just am really concerned with, like I said, higher inflation, people kind of tightening their belts, so to speak, not spending on discretionary sectors. And I know this is in an insurance sector, so it's not in the consumer discretionary, but I feel like this would be one of those things where if people were tightening their belts and pulling back on spending, is additional insurance beyond what you're already insured something that you're going to spend money on. I mean, I guess it's a possibility. It's just not one that's really high on my priority list, but it is a company that I have my eye on, is on my watch list. Full disclosure, this is where I'd show you if I had shares of it. Again, I do not have it in my portfolio, but it is on my watch list. So that's Aflac. Let me know what you guys think of, guys and gals, think of Aflac. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think of Aflac. Let me know what you think of the video. If you have other insurance companies in your video, I do like the insurance sector. It is one that I like. A lot of float there whenever people are paying their premiums from the time that the companies try to pay out. So that's how they make their money. I do personally read and respond to the comments. I'm always interested to read your questions, suggestions for future topics, opinions. Drop them all down below. Constructive criticism is welcome as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, investing journey for educational and entertainment purposes. Investing involves risk. Again, lose money, so you never invest any amount not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice of counsel of a certified financial advisor.